Hello traders and welcome to another video review. Today is Tuesday 17th August 2021 of course, and let's take a look at the Forex calendar to see what is going on today. Monetary policy meeting minutes from Reserve Bank of Australia had been released 3:30 in the morning, so we'll definitely take a look at the Australian dollar today again. During the London session, at the beginning of the London session, we have a data published from UK Climate Count Change, Claimant Count Rate, and Average Earnings Index. As you can see, earnings index is increasing from 7.4% to 8.8, kind of a nice increase. Climate count rate is declining from 4.8% to 4.7, and the climate count change is minus 7,800, which is way below 84,100 expected, and way below minus 136,000 as well. What else we have during the London session? Revised GDP from the Eurozone scheduled for release in 6 hours and 3 minutes, and employment change at the same time. Those data are from the second quarter. During the New York session, we have a housing starts and Virgin Securities purchases from Canada, but the most impact will come from retail sales data from the US, scheduled for release in half past 2, of course. Industrial production quarter past 3 might be interesting as well. The other data don't have that much impact on markets. Expect the Jerome Powell speech scheduled at 7:30 p.m. So that's a kind of interesting day, kind of a busy day today. We should take a look at the Australian dollar first, I guess. What is going on here? As we can see, the Australian dollar made a new local low, and now this low is a swing low. Why? Because on the 21st of the July 2021, we have a bounce from 7,000, and the low was 7,291. We tested the technical resistance, no breakout, no daily candle close, and then after 2 weeks of consolidation, we have a breakout to the downside. Today we already have 7,283 level hit, so we are going lower, and as you can see, the bears are in charge of the momentum. The bears are in charge of the market, and the bearish pressure is visible. So right now, this is the key technical resistance because it's been tested and it's been approved by the market participants. We are moving our our arrow, of course, lower, and now 7,288 is the next target. It's being tested right now, and the ultimate target for now is 7,244, which is the technical support right from the last year, middle of the November. This is no good for bulls. Our pattern, shoulder, head and shoulder, is working very well. Targets are being hit, but it looks like market wants to go a little bit lower. Market wants to go even towards 7,244. But if this level is clearly violated, then we don't have any significant support until let's say 7,162, and then the next one is around the level of 7,000 and 6,992. This is the next key technical support. So please keep an eye on the Australian dollar because we are reacting very dynamically today. Market is going lower. We already went down today over 50 pips, easily over 60 pips now. So please keep an eye on the Australian dollar and on the behavior of the Australian dollar at the levels that I have just mentioned. I guess that the British pound is doing something as well. What do we have here on the British pound? The first thing is, let me just zoom in. We are again going down, and this pattern, this kind of a flag pattern, is not working for now. It looks like this bounce from 1.503568 is completed right now. So let's see how deep we can retrace. 38% already done. We are now looking for 50% retracement, 1.3779. This is a technical level for the retracement. There is some support. Let me just yes, it might be, yeah, the support might be somewhere around 61% of the Fibonacci retracement, 1.3731. This is the 61% Fibonacci retracement, and the technical support, the other technical support, is at 1.3712. That's the other technical support. So pretty good zone for the bulls to wake up and push the price higher if they want to continue this move, because what I think is going on here on the British pound is that was the wave A. We are going to develop the wave B, and we need wave C to the upside. So it looks like we are making this kind of a pattern here that you can see, ABC pattern. The leg A is done, the leg B is in progress, and we need more to the upside in order to be certain of this pattern. So if we bounce from the level of 61%, 1.3731, we can go as high as this level, which is 1.4137. That's the Fibonacci market geometry and Fibonacci levels confluence. So we can go as high as this. If we break below 61% and the technical supports are no longer providing the support as they should do, then of course this might be this scenario might be invalidated, and we can go lower towards 1.3670, and then of course towards the lows from the end of the July at 1.3568. So that pattern is invalidated, which is even worse for bulls, because that means that bears are in total control of the market, and we can go towards new swing lows towards the technical support at 1.3486. Very, very bearish scenario. So what is then going on the US dollar to the Swiss franc ahead of the data? As you can see, we got this ABC pattern completed here. We got the first leg to the upside, but there is no bullish continuation after this pattern is finished. What I mean is that we have a first leg here, and then we are going lower. As you can see, momentum is under the level of 50 already. We have a third day of a down move, and the market doesn't want to continue the move to the upside. This move should be completed. So what do we have here is a ABC pattern of a higher degree. So that's supposed to looks like this, and this is the higher degree pattern. So what I maybe I should, yes, show it like this: wave A, ABC correction, wave B, E, and another wave C to the upside is done. Maybe this was only a running correction or something like this, and 1, 2, 3, 4, 5 maybe, and this running correction is completed, which is very, very bad for bulls, because it means the running correction is done. It was very short, very shallow, and we can continue to go lower. The market is ready to continue that move lower, which means we should test soon 9,054 and 9,045 technical support. If this is broken, then the lows of the 4th of the August, 9,023 pips, and if this is violated, then 8,998 pips. This green line here should be tested as well, because it's a technical support for the market. So this is how it looks now on the Swiss franc. And at the end, let's take a look at the Ethereum. What is the Ethereum doing here? Everything is according to our plan. The 61% of the Fibonacci retracement has been hit. Let me just zoom in here to see the situation more clearly. Yes, 61% has been hit. We expect this kind of a pullback here. Nothing new for us. We still expect this kind of a pullback. It shouldn't go way below $3,000, and when it's completed, we should continue the up move towards 4,000 and then eventually towards $4,202 or higher, right? If this level is violated, 2,944, the next technical support is located at 2,615. So right now the outlook is bullish, despite the fact that we have negative divergence. We just see we're just waiting for the pullback and see the other wave unfolding almost immediately after the pullback is terminated. So that's my analysis of markets for today. Thank you very much for watching, and I hope I see you guys tomorrow. So take care and bye bye.